Hi everyone, whoever's joining us right now for another live trading. Today we have a very cool guest. We're joined today, we have here Fabio from the Trading Academy. He's going to guide you today through the live trading session. So guys, enjoy, take notes. We will have time for a Q&A, so don't worry about that. And Fabio, go ahead.
Yes, thanks guys, everybody who has tuned in for today's live trading stream. What I'm going to do, Eileen, as well, is I'm just going to invite a few people as well from the Trading Academy community as well to tune in. I want to have as many people as possible here on the live stream. So that's going to be great. So yeah, like Eileen said, we are going to be answering all your questions in a second. What I want to do today with you guys is just run you through the markets, my perspective, see what's been going on. Quite a lot is happening at the moment, obviously with gold pushing into new all-time highs. The pound has been taking a beating after yields on the bond market have been rising into the highest levels actually since 1998. So a lot is going on, and yeah, we're going to discuss it all. Yeah, just quickly see what is going on. So I've dropped the link as well in the Trading Academy. So yeah, great to have you all on board today. At the moment, if we look at the euro, because for your knowledge, guys, I mainly trade the major dollar pairs and next to that also gold. So my main focus is pretty much Euro USD, GBPUSD, AUD USD, and NZD USD. Main reason for that is because they move yeah, pretty much in sync at all the time, and therefore it's for me a lot easier to not only from a fundamental perspective understand how these pairs are moving, but also from a technical perspective because the overall alignment is a lot easier. So overall, the dollar has been very indecisive throughout August. If we look at the dollar index, which is obviously the main kind of like a way to see and understand where the dollar is trading at, you can see I have this little range trading tool drawn in. Now, a range trading tool is nothing more than a Fibonacci with the 0.75 and the 0.25% fib drawn in. These are natural areas of support and resistance, and as you can see, the 75% level acts as an area of resistance, and that's also where we rejected actually off of this morning in alignment as well with this third trendline touch, and we've been pushing back in towards the lows. Now, what I call this area that we're currently trading in with the dollar index, this is pretty much what you call no man's land. So this is kind of like the red zone, and inside the red zone, that is definitely where you want to stay out of. This is pretty much where you're always just going to get screwed over, if I can say that. And where you want to stick towards is trading above the 75% level. That is where you want to be looking for potential sell opportunities. And then below the 25% level, that is where you want to be looking for potential buying opportunities. Now, as you can see, since pretty much the 7th of August, so the beginning of August, the dollar in itself has just been moving sideways. So what do we tend to do in these kind of market conditions? We stick to the premium of the range. That is where we ultimately want to be looking for sells. And then from the bottom of the range, we want to be looking for potential buys. Now, when I translate this into analyzing a pair, my main pair or my main, let's say, top pick this week has been GBPUSD, a pair which moved beautifully in alignment overall with the dollar index. Now, if I use a split screen here, and on my right chart, I'm going to draw in the dollar index for you guys, and then we're going to go down to the 4-hour time frame. You can very clearly see here that at the time where the dollar index was trading at that 75% level, which was around this blue line over here, and we came into that 75, or excuse me, in towards that 25% level down over here inside of the green zone, you can see that that is the same moment that GBPUSD was trading at an internal, what I like to call liquidity high. You can just view this as an area of resistance as well. But that is the same moment that GBPUSD was trading there and eventually gave a strong downside push, which was in correspondence with eventually also the dollar index pushing up higher. So what I then did is, okay, I understood the dollar index is trading at the 25% level. So that might be a good moment to potentially look for buying opportunities on the dollar. Well, what do I then do? I translate that into a pair that I actually like to trade, which is then GBPUSD. And on GBPUSD, you can then, for example, see that as soon as this overall high here got taken out, a market structure shift I like to call this a fractal structure shift, but you can just call this a market structure shift. A market structure shift in towards the downside here happens with the break of this overall black line. Now, on the 4-hour time frame, it seems maybe a little bit unclear, but if you, for example, go into, let's say, the 1 hour or even the 15 minute, on the 15 minute, it becomes a lot more clear. You can clearly see here that we had a push up, we had a push down, we had a push up, we had a push down, we had a push up, and then we broke market structure here in towards the downside. We retested the high, and then boom, we dropped in towards the downside. So this is how I then use the dollar index together with GBPUSD, and how you can still, pretty much take opportunities within an overall ranging market. Now, for myself, it's a little bit unclear and indecisive where GU and, for example, Euro USD are going to be trading at. If we look at, for example, the dollar index, we can see that the dollar index is now trading within our no-go zone. So the dollar is not mainly a pair that I'm actually really focusing on trading at the moment, especially if you also look at, let's say, GBPUSD, or maybe Euro USD is the better example for you guys. You can clearly see that Euro here is trading as well inside of that no man's land. Now, what you again want to be doing here on Euro is sticking to the extreme, so the 25% level. That is where you want to be looking for those potential buying opportunities, and from the 75% level, you want to be looking for potential sells. So here for myself, it's not very interesting to get involved with Euro at the moment. I would personally only be looking for Euro sells once we reach those higher levels above the 75% mark, and preferably when we take out this X over here, we kind of like come above the highs, we get a fake breakout, and then I would be looking for a potential sell opportunity. So that's what I'll be waiting for on Euro. I'm not very interested in looking for sells over here. Yes, it can indeed sell off, as there is still a lot more downside for Euro USD potentially to come. If I'm not, or if I am very honest, obviously this Friday we have NFP coming out, so the labor market data in the United States. So it is in a certain way gambling, because nobody knows what we are actually going to see in terms of numbers this Friday. So what I always advise to do is, okay, it's fine with getting in on a trade on Monday or Tuesday, for example, from the highs, or for example from the lows, but you don't want to be guessing in the middle of a range, and then in combination with NFP, anything can happen, right? It can go both up and down. So preferably what I would do is I would say wait for NFP on Friday to happen. Let's say Euro pushes in towards these highs, and then we'll, for example, see the price slow down, and then maybe we can then next week look, for example, for a short to take out the overall low that was then formed throughout the overall NFP news announcement. So that's my overall outlook in itself for those dollar pairs. My main focus at the moment is GBPUSD. GBPUSD is kind of like a little bit more trending as opposed to Euro USD. We broke this overall little uptrend here in towards the highs after grabbing liquidity above this high here. And now on an intraday time frame, we can clearly see here that we have a break of this blue dotted line. So for myself, GBPUSD at the moment is bearish. Overall, we had a very strong impulse in towards the downside. We then came back in towards the highs, and I can imagine there's a lot of blue lines for you guys, but trust me, the chart is very clear overall. I'll just quickly switch to a clean chart for you guys so you understand what I'm actually looking at. All I'm actually looking at here, break of structure up, break of structure down. This here for me is a little liquidity high. The liquidity high here gets taken out with this grab, and now I'm just looking for an overall downside continuation on GBPUSD to come back in towards downside towards this overall NFP low. Yeah, guys, we're going to check GBPAUD in a second. So overall, I would favor a next downside push here for GU. But what I'm now looking for is from an intraday perspective, because on the intraday time frame, what has happened, again, the same range trading kind of concept applies here to the 1 hour time frame, where we had an overall low formed over here. What happens? We take out the low, and then we reverse up higher, and now we take out this high, and I'm now looking for potential reversal down lower again. So I'm now looking to see if we can get a market structure shift here of this overall low. Maybe if that shifts, then I'll be happy to look for another short in towards the downside in line with overall momentum. But for that short to start playing out, we need alignment within the overall technicals, and we need that confirmation, because at the moment, GBPUSD is obviously trending in towards the highs, and we could just continue trickling up higher. So I do want to definitely see some form of confirmation before getting involved with any potential shorts. Now, from a fundamental perspective, the pound has been very, very weak. A good example and a good kind of like indicator to understand the pound has been weak is looking at the GBP 30-year treasury yields. So what is a treasury yield? A treasury yield is ultimately just the return that you get from a government debt, so from a bond. So what you need to understand is that you have a bond, and a bond is issued as what? As, let's call it GD. So that's government debt. So obviously for a country to function, right, it needs income, and income is made through, for example, tax. And if you don't make enough income to make your investments, to, for example, build new roads in a country, what does a country do? It issues new debt. How does it issue new debt? It issues new debt through bonds. And then what is the overall return that I, for example, myself get from buying those bonds? That is the yield. So what happens in countries where you have a very high yield? Well, that's a very risky bond, because people want to be paid a massive amount of interest or a massive amount of percentage to buy that specific bond. So for example, if you look at the bond market in general, and you can just go onto the internet and you can look up, for example, Brazilian bonds, or you can look up Argentinian bonds or Venezuelan bonds, you're going to see these massive yield prices, because who the hell wants to buy debt from a country like Venezuela or Argentina, where the currency is devaluating by the day, right? And the same is, for example, for Brazil. You can get very high interest on government debt because nobody really dares to hold it, because the political stability is nowhere to be found. And obviously we have military issues in these kind of countries as well, where corruption is also obviously a very big part. So it's very historic to see the pound actually devalue, or let's say yields go up this high, because if you look here on the monthly chart or even the 3-monthly chart, you can see that at the moment we are at certain levels of this yield that haven't been seen since 1998. So this is causing a lot of instability within the overall outlook for the pound. And that is why we're seeing these pound pairs sell off pretty hard throughout the entire week in towards the lows. Now, most of these pound pairs have now made an overall retracement. So for example, GBPUSD pushed up higher, as I just showed you guys, and now it's starting to give some bearish reaction again. So let's see if we can get some bearish confirmation throughout these pound pairs to then potentially look for some more shorts in towards the downside. So pairs that I'm monitoring at the moment, well, Euro GBP, for example, already made its overall lift off in towards the highs at the beginning of this week. But pairs that I am looking at is, for example, a Euro GBP long. Another potential trade opportunity that you guys shared here in the chat is also GBP CAD, though I must say I'm not a big fan of looking for longs on pound CAD, as the overall fundamental outlook for the pound this week is not very ideal to be looking for longs, in my personal opinion. So I'm not really looking at longing the pound at this point in time. I'm mainly focusing moreover on selling the pound throughout this week, and I see this pullback mainly as another opportunity to look for additional short positions on the pound. So for example, selling a GBP CAD or selling a GBPUSD, with my favorite trade pretty much being the GU sell. However, I must admit that I can now say that GU sells might look good, but Friday with NFP, anything can change. So I have a good question here. USDCHF short position. Let's have a look at that one. USDCHF in itself has been extremely consolidative. To be honest, even more consolidative than the XXX USD pairs. If we look here at USD Swiss, and let me just delete all the lines so I keep it nice and simple for you, we can start on a daily time frame. So from a daily perspective, if we look at the market structure, that's always the very first thing that I do. We can clearly see that we have a breaker structure in towards the downside here. Now, this here is my swing high, and I draw that down in towards my overall swing low. And what I naturally use is premium versus discount, where we have a level called the 0.5 fib. Yes, it's as easy as that, which is always, in my opinion, going to be a natural area for support and resistance. So I'm looking for the 0.5 fib to act as an area of resistance and potentially push the market down lower. Now, we've already tapped to that 0.5 fib, so that means that from there we could potentially see some more downside. Though for me, USDCHF at the moment is moving sideways. Anything can happen from a manipulation perspective. So this is not really a pair that I'm looking to actively trade. I must say though that it is interesting from a liquidity perspective. So here we took at a high, here we took at a high, and then we had a strong sell-off in towards the downside. Therefore, for me, this at the moment is a potential strong area of supply / resistance, from where I would preferably want to see another sell-off in towards the downside. Now, this morning on the lower time frame, we saw a strong dip in towards the lows. But to be honest, nothing too significant at the moment. For me, this is moreover just a kind of like a box that we're currently trading in. And I would only be looking for some more shorts on USDCHF if the momentum continues to carry in towards the downside. I see a question about ADCHF shorts. ADCHF has been pushing up higher and higher. Overall, we have been pushing on the Australian dollar. Not only Aussie Swiss, but also Aussie Yen has been pushing up significantly in towards the upside. We've seen a lot of strength from the Australian dollar and a lot of weakness from safe havens. So the Swiss franc and both the Japanese yen have been taking quite significant beatings. Aussie Yen is an interesting one, just to tap into that potential trade opportunity where you're looking to sell Aussie Swiss or maybe an Aussie Yen. We have now Aussie Yen here at the yearly open level, which is a natural area of support and resistance. As you can see, the previous times that we hit this level, it was a very strong area of resistance where we made a clear tap and then straight away pretty much a sell-off. So we've tapped into that level today. So I'm looking for some potential shorts on Aussie Yen back in towards the lows here for a potential pullback after this massive, significant 300 pip rally in towards the highs. So if I were you, I would monitor Aussie Yen to see if we get any potential downside momentum. We can also clearly see that the overall trend line here has been building up a lot of liquidity in towards the highs. So I do see their potential for a short in towards the lows. Diving into Aussie Swiss for you, Aussie Swiss has been continuously pushing in towards the highs. At the moment, we're again at a very interesting level where we've taken out this high over here. This for me is a so-called liquidity high or bump in the road, whatever you want to call it. This could fuel a leg down for the Australian dollar against the Swiss franc, as the overall market structure also is bearish. We can see that we had a bullish market phase over here, which then shifted after we had a break of clear structure in towards the downside. Now, from a swing structure perspective, the market has retraced into premium pricing. So for me, premium pricing is everything above the 0.5 Fibonacci retracement level. And from those prices, I'm always happy to look for potential sell opportunities. Now, with us taking up this level here, I'm indeed favoring a strong pushback in towards the downside. However, for myself to look for short positions on the Australian dollar against the Swiss franc, I always need to see two things. That is one, liquidity, which we have indeed grabbed over here in the form of taking out a swing high. And then thing number two that I want to see is a market structure shift in the form of, for example, a low break of this bearish candle. So for myself, Aussie Swiss shorts would only become valid once we break that low, and then we could start looking for potential shorting opportunity. If you want to be more aggressive, you could also monitor the 1 hour time frame, but then you can still see that the overall market structure low is still positioned over here. So there's still going to be quite the waiting game here on Aussie Swiss before it would be ready for any potential short positions, in my opinion. Going into GBPAUD for you, we can see that GBPAUD has continued to sell off down lower. At the moment, GBPAUD, so the pound against the Australian dollar, for me is not a good long. We can clearly see that we are in very heavy bearish momentum, and furthermore, there is still a lot of lows to potentially be taken out. So not only do we have the overall swing low here, furthermore, down over here, for example, we also have a liquidity low. And with a liquidity low, I'm just referring to the overall ascending lows that we have next to each other. Now, more often than not, before a big impulse in towards the highs, what will happen is that you take out a low which is positioned left of the actual low that you're establishing. So here we have a low established, and you can clearly see that it takes out the low to its left before the overall reversal in towards the upside takes place. When a low is not taken out, for example, this over here, before a strong push up, it is very likely that the market is to come back to take out that low before the next drive in towards the highs. So here, for me, again, we have a lot of lows next to one another. GBPAUD would need to sell off further before any potential long opportunities could be identified. So what I want to see from the pound against the Australian dollar is still further downside, and probably another 120 pip drop. Something like that is what I'm looking for on the pound against the Australian dollar. Now, another question from Dave that we have here is, how do you determine targets for a retracement setup after swing high low liquidation? Because there could be a fresh supply demand zone that is less than a 1 to 2 or 1 to 3 risk to reward. So I'm just going to have to read that question again. So you are asking me, how do I determine a target for a retracement setup? So I think you're referring to an overall pullback trade, where when momentum is, for example, in towards the upside, we look to go short, or we look to go for a short position. So how do I then decide my overall risk to reward? So that's a good question. I think if we look at the charts here, we could say that this here is an example of what you're trying to trade. So when we had a break of structure, which is this black line here in towards the upside, we naturally are going to be expecting that the market will make a retracement in towards the downside. So the very first thing that I always do is I just mark out my overall swing low in towards the swing high. So what I have here is a swing low. What I have here is a swing high. Now, naturally, when price at the time was trading at this high, I'm looking to see, okay, can we expect an overall deeper retracement in towards the lows? Now, when we look at a potential retracement, there are always two things that you need to see before the retracement takes place. Now, I actually just mentioned it. First of all, we need to take out kind of like a swing high, or you need to come into what could be a supply zone, a resistance zone, a swing high, whatever you want to call it. And then second of all, you need to see a shift in the market structure, because at the time with this bearish candle here, the market was still trading within this overall kind of like demand order flow, like I like to call it. So you're still kind of expecting the market to head up higher from here after the lower time frame would confirm that it wants to head up higher. Now, what's interesting about this overall pullback trade is that here you had very clear liquidity in the form of kind of like this trend line. And what I love about trend lines is that I always kind of like want to see price move towards the beginning of an ascending trend line, especially one that has like a 1, 2, 3 tap. So this black line here overall was then my target for GBPAUD. But then if I look back at the daily time frame, what I need for that overall daily time frame to confirm that we want to head down lower is a shift in the market structure, which is a break of this overall black line low. So excuse me, here, for example, you can see that the market was still reacting to this overall kind of like order flow, this bullish order flow, this demand zone, this support resistance level, whatever you want to call it, but then eventually heads down lower. And then as you can see, as soon as we kind of come back down towards just something as simple as an overall low, the market straight away gives somewhat of a reaction. This is why I just always find that you as a trader should always keep and pay attention to these swing lows, because these are just natural areas where the market will always at least give somewhat of a reaction, right? So what we see is, okay, the market gave a reaction, but you can clearly see that the overall order flow remained bearish, right? So the overall buy for the sell here remained in control and again pushed the market further in towards the downside. Now, again, you can see when we come into this second low, again, the market gives us a reaction, but nothing significant, nothing at all that tells me the market wants to pull back. Now we've come in towards this low over here. And just to go back into the daily, now the daily time frame has given you what? A shift in market structure. So this black line break here, that for me is now a market structure shift that happened. So from that moment onwards, I can then identify potential shorting opportunities. Now, the thing here with the potential shorting opportunity, though, is that you're kind of already making a retracement towards 0.5 fib. Because if you look here, 0.5 fib already gets tapped. So for me, pretty much there's not even a real pullback trade to be taken here. Obviously, we continued with some momentum in towards the downside, but then you can clearly see that the overall reversal up higher takes place from that 0.5 fib, and that was then enough to push the market up higher. So when looking for a pullback trade, like the question that you asked, Dave, like you always want to be trading above the 0.5 Fibonacci retracement level, so at premium pricing, and you preferably want to see like a shift in market structure happen even above the break of structure line, as in those examples you have the best risk to reward. So I would not even take a short on this chart over here. I would just skip taking a short in whole for this, 19 days or 29 days for this month. I would only be waiting for the longs. And then as soon as we kind of like get the bullish confirmation here or here, that's the moment where I fully buy, not only once, twice, and then maybe even on the breakout 3 times. And that's where we overall make the returns that are going to make our month a good month. Okay. So that is what I would do when trading these kind of pairs. Excuse me. So yeah, that is what I would personally be doing. To give you a good example then of what could potentially be a short, let's say here we have a break of structure in towards the downside. Then here again we have a break of structure in towards the upside. At this point in time here, what happened is that we are trading where? We're trading at a premium. So we're trading above the 0.5 fib, right? So this here is 0.5 fib. This here is a premium. We take out, for example, this little high here as liquidity. And then here, what do we have? We have a market structure shift. So that then to me means that this overall buy for the sell here is an area of interest from where I can potentially look for short. Because furthermore, we also have liquidity open, for example, in this low. And remember what I said about liquidity lows, we have 2 lows next to each other. So that would and could potentially be a good target. So then I would, for example, go to the 4-hour time frame, and within that daily area of supply, we then on the 4-hour time frame can look for potential shorting opportunities. So then you want to get involved with potential shorts. So for example, here we have a little supply zone. That is then, for example, where I want to be involved with a shorting opportunity. We place a nice and wide stop loss. We want a 1 to 2 risk to reward back down towards 0.5 fib or a 1 to 3 risk to reward. And then from there, what happens? We head up higher. So for example, this initial position could be a stop loss. We push up even higher. So let's say position number 1 is a stop loss. We push up higher towards supply zone number 2. Well, this is the last supply zone that should definitely push or keep pushing the market down lower. And then again, we have a 1 to 3 risk to reward back in towards lows. And then, for example, the real sell-off in towards the downside started to commence. And then let's see the daily time frame here. Well, then eventually that hits your TP for 1 to 3 risk to reward. And then you can see that as soon as the market comes into that liquidity low, what does the market do? Again, what does the market do? The market gives you the overall shift in market structure. How does the shift in market structure take place? Here we have the overall low break. Then what happens? We break the overall high over here. Then what happens? The overall sell for the buy is your demand zone. And remember, what do we need for the overall continuation to take place in towards the highs? The exact same thing as we need for the overall pullback to take place. Here we have a liquidation of the low, and then here we have the market structure shift. So these are the number 1, this is the number 2, and then you successfully trade the overall kind of like continuation play back in towards the highs. And then you could look at, for example, trading the 4-hour time frame, where on the 4-hour time frame you have the clear market structure shift, and then you could look for that long position over here with, for example, your stop loss beneath the low. And then here you have around a 1 to 2 risk to reward already there back in the bag. So yeah, that's how I personally would be approaching it if I were you. So that is GBPAUD broken down for you, and also directly in relationship to how you can trade the overall pullbacks, but also then definitely also the continuations. USDCHF, FIFA Man, I already discussed. Not very interesting from me personally, just because of the consolidative nature, and NFP upcoming Friday. Euro GBP and GBP Swiss. So GBP Swiss has obviously been selling off, has retraced quite a bit in towards today. It's currently rejecting the monthly open level. For this, I'm mainly focusing just on more downside. I could definitely be wrong, but overall for me, the pound is just too weak to be looking for any longs. So I'm favoring an overall downside push here for the GBP Swiss. Though it's not my best, it's not the best play in my opinion. Not the best short of shorts, but it is definitely a position that I would be looking for further downside. Euro GBP in itself is a position that I would want to see one more push up before looking for a potential downside push again. But yeah, with the pound still being weak, I think a Euro GBP long position is preferable. A trade that I'm looking at the moment is a USDJPY sell. What this is just purely a range play. We can clearly see here that on the daily time frame, we've been stuck within overall an area of consolidation throughout the entirety of August. Price has been moving sideways. And all I'm simply doing here on the dollar against the Japanese yen is marking at the highs, waiting for highs to get liquidated, and marking at the lows and waiting for lows to get liquidated. So what I mean by that is just a take out of the high and then the reversal back in towards the downside, kind of like fulfilling the overall purpose that we have of an area of consolidation. So people are obviously trying to trade within this overall range. And what do? They place a stop loss kind of like on the outer range. So what I'm now looking for on USDJPY is kind of like to sell this back down towards the equal lows here at the bottom of the range. So that's a position that I'm currently monitoring for potential short. And then next to that, also an Aussie Yen short from the yearly open level that I'm also looking for to trade the overall pullback on this rocket ship. But for that, we need Japanese yen basket alignment. But it is starting to give something. The Japanese yen here is at the yearly open as well, so that would be perfect alignment with an overall AUD/JPY potential short opportunity, but also with a potential USD/JPY opportunity. So USD/JPY and Aussie/JPY, those are two potential positions that I have for myself. Then we have a question here on a Euro CHF short position. USDCHF is at the moment stuck in its range. Not a pair that I'm very fanatic about trading. I can definitely say that this is also, again, kind of like stuck within this. And then what happens here, you fake out on the low of the range, and here you fake that on the high of the range. So for me, really in the middle of the range, and not a very interesting pair to trade at the moment. Then we have another question from Red Knighted. The best pairs for continuation trades are gold and yen pairs. Yes, that is correct. the gold and the yen pairs tend to trend very, very hard, and they tend to move with a lot of momentum. So those are definitely pairs that you can, for example, apply buy stops to. Whereas, for example, a Euro CHF or a GP CHF, those are better to trade with buy and sell limits. USD JPY already gave a double fractal break, maybe on the 1 hour, not yet on the 4 hour, I think, because on the 4 hour time frame, and I use this indicator, the fractal structure indicator, the fractal low is still positioned over here. But on the 1 hour, indeed, it already gave a double 1 hour fractal low break. Nice liquidation wick at London Open. So yeah, this definitely has a lot of potential to sell off down lower for me. Yeah, so yeah, great trade. If you are in this, should give a 4 hour fractal break shortly, and then definitely I'll be looking also to sell this. To be honest, yeah, that together with Aussie Yen, definitely two very, very good picks. So let's see, when do we use refined supply and demand, and when do we use the whole buy before the sell? Yeah, so this is a good question, and a question I get a lot. For everybody who doesn't understand maybe what the question is, when identifying a supply demand zone, what I pretty much look at is something called a buy before a sell. So when we identify supply demand, there are kind of like two ways that you learn it, or maybe three ways even you could consider how you've learned it, where you use number one, the method where you look at imbalance candles. So what you're looking for is, for example, a rally and then a base and then a rally, or a drop, a base and a drop, and then use the imbalance candles as areas of supply and demand. Now, an example of a rally, base rally, or let's call it a rally and then a base and then a drop is here, where these imbalance candles inside, that is your supply zone. Now, what I tend to do is I use the other method called a buy before a sell, where I mark out the entire buy before the sell. So buy before the sell is just simply said, buy up for a stronger sell down that broke market structure. I tend to focus on this, and then inside of that, I just pay attention to the overall imbalance, because what happens, or what could happen, is that if the market is so extremely bullish, it will just leave without you, without ever coming back into that refined area of interest that you might have been looking at. So in this example, for example, comes back exactly into that refined area of imbalance. But there's going to be many, many examples where the market never does that. So if you, for example, look here you have imbalances, the market never comes back in towards it. What did it react to? It reacted to the entire sub for the buy. So just always mark out your entire sub for the buy. And then there's always going to obviously be more confirmation if the market reacts to the refined POI. But just simply look here, it already heads up higher. And then how do you know the market might already be ready to continue up higher? You see here, market structure shift, low break, high break, and then it just refined here, refined supply zone, or demand zone, excuse me, on the sell before the buy. And then from there, the market eventually heads up in towards the upside. So that's kind of like my approach to trading with supply and demand. So let's have a quick look and check in on GBPUSD. GBPUSD tends to continue to push up higher. So yeah, you can again see, guys, luckily not in any short positions on GU, despite there was potential for it. You can see that the overall order flow remains bullish, the overall demand is in control and keeps pushing us up higher. So don't get into any sales prematurely. Always wait for the overall confirmation before actually identifying any potential sells, okay? So this here, if you want to take a sell, you need to wait for the fractal low to break, and then you can take a sell. Otherwise, this could just trickle up higher and higher and eventually take out the highs. And this should be in correspondence with Euro USD, which also does the same. Again, here, demand is now in control, and now the next demand zone is in control, which is this sub for the buy here. So as long as that remains in control, Euro USD should move up higher, and I am expecting us to push out higher throughout this session and definitely take out this high again next. So yeah, I think quite a long talk there on markets and on charts. Hope everything is clear for you guys. If you have any questions, still let me know. And that was it from my side. Main focus is UJ and Aussie Yen.
Hey, yeah.
Hey.
Let's see if we have a few more questions coming in, because I did see a lot of people getting excited about NFP in the comments. Let's have a quick look, guys. If you have any more questions that you want to ask, Fabio, this is the time. This is the time. NFP questions, gold questions, USD.
Yeah,
Let's have a quick
the
look.
Jolt job openings just came out 6 minutes ago news. So that came in worse than expected, which is currently causing the dollar to sell off, and we can clearly see you're usually pushing up higher. So yeah, bad dollar news, further accelerating a push up higher on euro, and yeah, further pushing the dollar index down at the moment. So yeah, dollar index is coming for that low here next. Has the potential to further push down. So yeah, if you are interested in buying the dollar soon, then I would definitely wait for it just to push down a little bit lower, and then we can potentially look for a reversal. Jolts is a little bit premature in regards to labor market data for the United States. Obviously, Friday is what it's all going to be about with NFP. So any moves that are happening now are pretty premature and could possibly just be mirrored back up. So if we do sell off a little bit more aggressively, maybe I'll look for a buy from the lows on the dollar, and then we can potentially look for some GU sales or something.
Alrighty. What else do we have? Someone asked, who is the CEO of the Trading Pit? And funnily enough, guys, we actually have a very cool interview that Fabio did with our CEO. It is the pinned video on our channel, so you can go and check it out after the live stream. It is pretty interesting. You get to know the CEO a little bit better, so that's very cute. And we also have someone that says, I have a question about TTP funded. Please do ask your question so we can help you and answer. Let's have a look. I see there's another question from Dave. Fabio?
Yeah, let me dive into that. One sec. Let's see. So what do you think about trading purely technical without fundamentals? Because in my view, fundamentals are already considered and mirrored within the technicals themselves. Yeah, Dave, I think you raise a good point there. To be very honest, I agree with you definitely to a certain extent. It's always good just to focus on one thing. I've been extremely profitable without ever looking at the fundamentals themselves. However, at some point in time within your journey, you will come at a stage where you want to understand more about the market in itself. Like at the end of the day, I always tell this to anybody who asks me about what do I do. Like if they ask me, hey Fabio, like, or especially if you guys ask me, Fabio, do you trade just purely with technicals? Like at some point in time, you want to learn more, because if you're, let's say, just imagine like you're at a birthday party, let's say somebody from your family asks you, so what do you actually do? You don't want to just be saying, well, I trade fair value gaps, I look for the inverse turtle soup, and then I trade the silver bullet, and then I make money. Like you want to actually kind of like develop a better understanding of the markets and be able to explain why certain movements within a market happened, which will just contribute to your overall, not only your overall self-development, but also your overall understanding of the financial markets in itself, and will open doors potentially in the future. Like with my understanding now of fundamentals, I've opened certain doors that have, yeah, definitely kind of like, yeah, provided me with new opportunities. And these are not all trading related, but also just to expand my overall network. Because again, if you go to some high level trading conference and yeah, you're going to be speaking to some of the older guys who might be there, nobody knows what a fair value gap is, and they're going to say, what are you smoking? Like that's probably the general question that you're going to get, or the general answer. So yeah, definitely that's why I always say like focus on the fundamentals as well.
All right. Well, Fabio, do you have anything else that you would like to add? Anything like a little tip, maybe a few bullet points for NFP for the people preparing for Friday before we sign off?
Yeah, definitely. I think it's a good point, or something that you should definitely focus on at the moment is studying and understanding previous NFP announcements. Try to understand what happened in those previous instances. Most of the times with these kind of news announcements, you'll see a move in a certain direction and then a reversal back to take out the initial low that was formed. So yeah, these news events often provide us with potential future liquidity targets, or what I like to call liquidity targets. You can just call it a target where you would like to trade towards in the future. So yeah, view that, do some research on that, and understand what NFP actually even means. Because I remember when I was already trading for around half a year, my first year back in 2019, 2021, I didn't even know what NFP stood for. So maybe look at that first. Yeah, then check out that.
All right. Well, guys and girls, you heard Fabio. I hope everyone's preparing and are ready for NFP. I just want to remind you guys that we have a few last days of the summer campaign. Okay, we have 20% off with the code SUMMER20 for our Prime challenges, except the 5K challenge that we have for CFDs, because I have here a question about the 5K account. So FYI, that one is not in the promo. The rest are above 150 euros. So keep in mind, you can get a very cool account for 20% off. And that's it from my side. Fabio, thank you so much for another great session.
Of course, always a pleasure. No, thank you for inviting me, and always good to be on, guys. Appreciate you all turning out here and being here, and hope to see you guys very, very soon in the next live session.
Awesome. Thank you. See you guys.